Welcome to the Beginner's Room with me today, everyone. Whether you're joining me from the Beginner's Room or you're joining on YouTube, please feel free to use the chat box. Ask me your questions. If you do have trades ongoing for you that you want us to look at together, or you're looking at the trade and trying to analyze, you want to find maybe a second opinion on it, do well to let me know in the chat box. I'll be more than willing to take a look at it. All right. So we're going to do market analysis mainly because we are talking about technical trading today. So what are some ways that you trade when it comes to technical analysis? You should already know one of the ways to analyze the market is using technicals, and technical analysis has to do with the charts. You can decide that you'll be basing your strategy for finding trades on candlesticks, the way the candles are moving, the whole HLC of the candle, or you decide, okay, I'm looking for chart patterns, double bottom, tops, head and shoulders, and all that, or pure price action, or even indicators. So now talking about indicators, I do have one indicator on the chart. This indicator, usually when you see it on the chart this way, it would feel and look complicated because it seems we have quite a lot of lines and all of that on the charts, but it's a very simple indicator to use. So we'll talk about how to analyze the market using Ichimoku today, which is one of the indicators that I like to use if I am, for any reason, considering using indicators on my chart. So what is it Ichimoku trading about? How can you trade with it? That's what we're going to be looking at. So we'll basically look at some of the rules for trading it. We'll talk briefly about the background, and then we talk about the rules for finding trades with Ichimoku, and then we go ahead to analyze the market using this Ichimoku. So Ichimoku Kinko Hyo, that's what it is called. And you'd see we have on the chart right now, Ichimoku, but I'm going to go back and go to a naked chart and show you how you can simply add that to your chart. So this is a simple naked chart. Now on this naked chart, yesterday I was analyzing and I saw a pattern, um, which is a double bottom pattern. That pattern already formed properly because the neckline had got broken at the time I was looking at it. Um, all right, so this is like the neckline of this double bottom, and you'd see that that neckline was already broken, or it's already broken at this time. It got broken, retraced. This would have been a candle I probably would have also entered with, but I wasn't in the market at that time. At the time I was seeing it, it has pushed down this way. So I was waiting for another close above the neckline, which hasn't really happened. We have just like weeks of candle trying to go back above the neckline. So I'm still waiting. And when when it finally resumes and starts to go to the upside, I will be doing the buy for this one. Now, to further confirm, I would then use Ichimoku to further confirm whether I'll still be buying or not. And in that case, I'll be showing you how to add Ichimoku to your chart, Ichimoku Kinko High. So I go to indicators, I go to trend indicators, and under trend indicators, we have Ichimoku right here. So I'm adding that to my chart. Now, you may be adding this to your chart and find that your colors are different from what I have for my lines. This is because I've changed the colors. Um, I have this blue line being the conversion line, also known as Tenkan-sen. All right, so these are the colors you're going to see. The Tenkan-sen probably will come as a default of red, but I decided to change it this way because it's easy for me to know what each one stands for by seeing these colors this way. So you may change just as you want, but it's important to know each of the components of this indicator. So when you have the components, it will also be easy for you to move around with your analysis to know exactly what your what you're seeing and also know at what time to be able to enter. Interesting thing about this particular indicator is it makes it's quite easy to find your strong support and resistance level with it. It gives you trade idea, gives you good entry, exit points, shows you the market direction, gives you clarity as to what the price is doing majority of the time. So when you're able to do this, it becomes easy for you to trade on your own. And of course, that's what we are all desiring. We want to be able to make our trade based on what we are able to see, simple entry and exit rules. And that's what Ichimoku provides for you. You can easily know at what point am I going to enter, at what point am I going to exit here. And that makes it easy for you to find trades from time to time. So since we all desire to be able to find trades, using this would make a lot of sense. So what are some of the things you will look out for? So Ichimoku, it's basically a trading system that was brought into use by a Japanese trader, in the 30s, and he made it in the 30s and started to work on it and practice with it for 30 years until the 60s before he released it to the public. So it's not a new indicator. It's been in existence for quite long, but the interesting thing is it still works. And I've tested it with trade a lot of the time. I've done many back tests with it, and I see that it works. And that's one of the reasons I decided to still show it to you today. All right. So what are the components of this indicator? Let's go look at the components of the indicator and what each of them represents. So I won't want to waste a lot of time just talking about everything. I just will talk about each of the components. So the components that I mentioned earlier, conversion line, which is Tenkan-sen. This Tenkan-sen, for me, is the blue line here, and it is made as it shows the potential support and resistance area can be given with it, and it is calculated by 9-period high plus 9-period low divided by 2. That's how it is made. Then the other line, which is the red line here, is known as Kijun-sen, and that line is also in English called the baseline. Now, this baseline, I have changed the color to red. So you need to change your color as you like so that you remember which of it. So if you hear me saying red line, I'm talking about the baseline. Now, the baseline is calculated by 26 period high plus 26 period low divided by 2 or multiplied by 0.5. So in that case, you already have an idea which one is bigger and which one will be the faster one. They are like when you had moving averages to your chart. When you had moving averages to your chart, if you had two, for instance, I like to add moving averages, two moving averages to my chart. So if I had two moving averages, these two averages will indicate there will be one that is lower, that has lower period than the other. So usually I had 20 and 50. The 20 will be the one with that is faster. It will be the faster moving average because it has lower period. And then the 50 will be the wider one. And that's what this looks like. It's like adding 9 and 26 moving averages to the chart. And you can see that this one is closer to price than the red line. Okay, so that's what the two of them are. I also have very faintly here, like a gray color somewhere in the background. There's another line there, and that is called the lagging span or the Chico span. It is calculated by plotting closing prices 26 period behind the latest closing price of an asset. And we have, aside from that, the Seco span, which is known as leading span here. And leading span here is the green boundary of the cloud, the green boundary. We have another one called the Seco span B. It is the leading span B or the red boundary of the cloud. When the red boundary of the cloud is above the cloud will be shaded red. When the green is above the red, the cloud is going to be shaded green. All right. So have that in mind, and it will be easy for you to understand what each of them are. The lines that we are going to pay more attention on are the leading span A and B, and then the conversion line and the baseline. The conversion line and baselines, where they are, would help us, would give us the entry rule or the go ahead, while the cloud or the leading span A and B will give us idea of the market direction. If the price is above them, can give us idea that we are in an uptrend. If the price is above the cloud, below the cloud, it will show that we are in a downtrend. So that gives us the idea of like a setup and then finding an entry. So to adopt the Ichimoku Kinko strategy, what are some of the things we want to look out for? Now let's look at the interpretation, of the rules first. The first thing is when the price is above the cloud, like when we were here, we are uptrend. We are considering that as an uptrending move. When the price is below the cloud, we consider that we are in a downtrend. And when the price is in the middle of the cloud, we say that we are in a ranging market or a consolidating market. Now, this charting method provides bullish and bearish signal of different strength level. So you may be able to tell that, oh, this trend that I am seeing, or this bullish trend I'm seeing, is a strong one, or it's not so strong, and there's a possibility of a change in trends. And by looking at how the cloud is formed, And another thing you want to know is the lines, the Tenkan-sen, which is a conversion line, and the baseline known as the Kijun-sen. When the Tenkan-sen crosses the Kijun-sen from above and it goes below it. So what I mean is the blue line here, it goes below the red line. That is considered, let me see. If the blue line goes below the red line, it's considered bearish. If it goes above it, if it crosses from below and it goes above the red line, it is considered a bullish signal. All right. So in this case, I mean, when it crosses the Kijun line from below, in which case the blue line was initially below the red line, and then it crossed it and went above it. That's kind of confirming the uptrend. However, when the conversion line goes below, it crosses it from above and goes below the baseline, in which case we have the blue line below the red line, then we say that we're having bearish signal. Okay. So you want to pay attention to the color of the cloud as well. When the cloud is shaded green, it kind of gives an idea of bullishness. When the price is shaded red, it shows that we are in a bearish trend. Okay. Also, the size of the cloud is important aside from the color. When the cloud between these two lines, right, between the boundary is, when it is small, when the line is small, then the trend may not be very strong, right? But when it is expanding, it might show that there's a strong trend that we are looking at. It's useful for any kind of trader, whether you're doing day trade, swing, scalping, because this you can use from 1 minute time frame, 15 minutes, daily, weekly, whatever time frame you're using, you can use it from. So whether you're a day trader, a scalper, intraday trader, you can use this to find trades for yourself from time to time. This Ichimoku trading strategy requires a lot of self-discipline, and this is because you have to wait for the best trade signal in order for you to trade with it. So the first thing you want to look out for is when the price closes outside of the Kumo or the cloud, which is also known as the breakout strategy. So you're waiting, you want the price to break out of the cloud to the up or to the downside. In the case of this area, the price broke above the cloud. This is because the trade trigger occurs at the points the price break through the cloud. So when the price breaks through the cloud, that gives you the idea of an opportunity to go ahead and do a trade. So the first thing you want to do is open trade in the direction of the respective breakout, and then you hold the position until the security breaches the conversion line, the baseline or the red line in the case of my chart. Okay. So the rules: wait for the price to break and close above the Ichimoku cloud. And these are the buy rules. If I'm looking to do a buy, I want to wait for the price to break out above the cloud in order for me to be able to make my decision there. Okay, so I'm waiting to see when price breaks outside the cloud to the upside. Okay, so on YouTube, we have Glenn Umbati says, hello, I'm asking on gold analysis, 1-day chart. Okay, interesting. Let's go to look at 1-day chart of gold analysis.